economy. After 1991, the worst economic crisis of India. In 2019, COVID-19 impacted the economy of India. The aftermaths affected the economy of India adversely. COVID-19 effects just started thereafter. Another effect of Russia and Ukraine war started in 2022. We will discuss the Indian economy in detail, but first, if you like my video, please subscribe my channel and hit the like button so that you could get all my videos. Now let's move to our topic: Indian economic crisis. After COVID-19 pandemic, the prices are going high. The biggest problem facing by Indian people is high fuel prices. Let's try to understand the Indian economy. India is the second largest population in the world. The gross domestic product, GDP, is 6.4%, 2023. Declined from 9.1% compared year, 2021. GDP per capita ranked 139th, which is the lowest in the world. Per capita means the income of a person. This is very low, therefore more than 70% population lives below the poverty line. Another important factor is negative trade balance. The Indian exports are only 23% of gross domestic product, whereas the imports are 30% of gross domestic product, which means there is 7% of trade deficit as compared to gross domestic product. The import and exports partners of India are America, European Union, China, UAE. The inflation is 4.5%, another high indicator, because according to Human Development Index, India ranked at 132nd. The unemployment rate is 7.7%, very high compared to different countries. India external debts are 20% of GDP, but recently the strategy has been changed. Now the external debts are being taken by the private sector. The stock exchange Sensex index is around 63k. The 80% earning is being made by India from public finance. Another important thing to highlight here is only 12% peoples give tax annually to the Indian government. By looking these economic parameters, the second largest population country, reflecting downward trend from the last 5 years. A study by Reserve Bank of India, RBI, released its report. It highlighted that many states of India heading towards bankruptcy. Here is a need to understand the bankruptcy. Bankruptcy means when a state is unable to pay its obligations. How a country heads towards bankruptcy. There are many economic factors influence the economy into bankruptcy. And these factors are controlled by a policy called monetary policy. Monetary policy is implemented by the government. If we review the monetary policy of India, the negative parameters are increasing day by day. An article published in America tells the reason why a country goes into bankruptcy. It also lists down the 7 countries which can go into bankruptcy in the upcoming years. The article explains the different reasons of bankruptcy, but the main reason it explains is debt. And if you see the India economy, its debts are increasing day by day. The S&P Global Rating, America agency, gave BBB credit rating category to India. If you read the BBB category, this is not a healthy category or positive category. Now the worse the credit rating of the country, more difficulty it will face in acquisition of loan from international market. In very simple words, the investor thinks why they would invest in a country like this. Because the risk of repayment is very high. Therefore, when a country having low credit rating try to raise funds from international market, it has to get money at a higher interest rate, same like that. The Indian economy is predicting to enter into such scenario, where it will be required to get money at a higher rate. Why Indian economy is going downwards? Every government is responsible for spending on citizens' need. Means how much government is spending to fulfill the needs of Indian citizens. And to fulfill the citizens' requirements, government is taking loan from IMF and spending on the needs of Indian citizen, but not on development projects. So, by taking loan from IMF and sending on expense will higher the cost. And consequently, becomes the cause of inflation. Therefore, the inflation is India is going high day by day. This is excessively unhealthy for Indian economy. For example, Indian states are not managing its finances appropriately. Such as Andhra Pradesh is managing the funds very poorly. Their debt to gross domestic product, GDP, ratio is more than 50%, rather than under the maximum limit of around 20%. Same like that Punjab debt to gross domestic product ratio is also more than 50%. This is very high, and the causes behind our state spendings, such as government is paying heavy pension expenditure. Because after the retirement employees get 50% of their salary as pension. In 2003 a new scheme introduced by the government, in which 10% of salary amount is contributed by employee, and equal to 10% amount is contributed by the government. It becomes the 20% amount in total, which government invests into the securities or shares to increase the funds pool. But there is a catch in this policy that at retirement, employee could withdraw maximum 60% of the equal aggregated amount. Some Indian states are against this policy and have not adopted. Example, West Bengal and Tamil Nadu, they refused to adopt the current scheme. But some Indian states adopted the old employee benefit scheme. Resultantly, the government spendings are more than 50% of their current GDP, and also more than 50% of their tax and non-tax revenue. So, more money is going into government expenditure spendings, in salaries and wages of employee in shape of monthly salaries and benefits, rather than to spend this money on development projects. Another example of government spending. Government power sector losses that is being incurred on every year. Punjab government is giving free electricity of under 300 units utilization, which is another trigger towards negative economy trends. Another example of government spending is giving heavy subsidies to the companies, which causes in heavy budget expenditures and consequently affecting the economy. According to economic principle, the more spending and development, the more prosperity will be in the society. And the minimum development expenditure but maximum expenditures will leads the economy of any country into disaster. Why the government of India is spending more on expenditure? Why Indian government is giving these freebies to the Indian citizen? This will lead India into disaster, because more expenditures lead towards the acquisition of money from international market, and their repayments are being made in US dollar, which resultantly decrease the value of Indian currency. Trade deficit is also increasing day by day. There are additional reasons of Indian currency devaluation. Russia and Ukraine war. International high oil prices. Foreign capital outflow. In 2022, the foreign investors took back their investment by selling their shares in the stock market around $30 billion. This is also another adverse impact on Indian economy, because when investor withdraw their investment, it causes the shortage of money. For example, a person has more expenditures than income. What will he do? He will definitely get loan from friends and family. Same like that India has deficit budget 2023. This means India has more expenditure than income, and it shall acquire the loan from IMF or World Bank to fulfill its budget requirements appropriately. And the repayments of loans will be at higher rate, as the America increased its interest rate recently. This will affect the Indian economy in 3 tiers. All these factors are affecting the Indian economy adversely, and this could enter the Indian economy into reverse functioning, which could lead India into bankruptcy. In the end, I will conclude it like the current situations of Indian economy is not showing good trends, and it is decreasing day by day, which will lead toward the worst economic crisis and will lead India into bankruptcy. I hope now you could have better understanding about India economy and the economic challenges coming up in the next 4 to 5 years. If you like my video, please subscribe my YouTube channel. and hit the like button so that you could receive my next videos. Thank you.